Hello again, welcome to Accounting 101 with T. This is the part 2 of our question 3 from the past paper, November 2018 question paper. We are going to be doing the notes to the balance sheet. It's 3.2.2, ordinary share capital and the retained income note. So without wasting any more time, let's just get into the question. So our adjustment F, or information G, not F, information G, share capital and dividends. Authorized share capital is 1,600,000 ordinary shares. Oh, I'm running out of battery. It's 20%. Authorized share capital is 1,600,000 ordinary shares. We have our balances at the beginning of the year and at the end of the year. So at the beginning of the year, it's 6,976,000. We are going to record it here. Let me just record it here. 6 million. How much is it? 6,976,000. 976,000. So authorized shares, our authorized shares are equal to 1,600,000. 1,600,000. Yes, it's 1,600,000. Let me double check. Yes, it's 1,600,000. So on 1 March 2017, which is at the beginning of the year, 80% of these shares were in issue. 80% of these shares were issued. So here you shouldn't have currency as this. Let's do it general. Yes. So 80% of these shares were in issue. 80% of these shares were in issue at the beginning of the year. So it's going to be 80% times 1,600,000. So at the beginning of the year, we issued 1,280,000 shares. These are the shares issued at the beginning of the year. These are the shares issued at the beginning of the year. Moving forward, on 1 May 2017, 300,000 shares were repurchased at 465,000 rand above the average share price. They were repurchased above the average share price, meaning that this amount is going to be recorded on our retained income note. This is going to be recorded on our retained income note. So what we have to do is we have to calculate how much is the average share price, because whenever we are repurchasing goods on our share capital, we use the average share price. So at this date, the only shares that we had is the 1,280,000 shares, and we had 6,976,000 rands for these shares. So we are going to use this information to calculate our average price, because the shares were repurchased after this information. So to calculate our average price, we are going to say the 6 million. We are going to say 6,976,000 divide by 1,280,000, which is then giving us 5 rands 45 cents. It's 5 rands 45 cents. So 300,000 shares were repurchased. Yes, 300,000 shares were repurchased. 300 shares repurchased. 300 shares repurchased at average price, which is the 5 rand, 45 cents. At 5 rands 0.45. Yes, that's it. So it's going to be 300,000 times 5,45, which is giving us 1,635,000 rands. 635,000 rands. Yes, this is our repurchases. So the amount that we are given on this information, which is the 465,000, this is the one that we are going to use on our retained income for the repurchasing of shares. So on the 31st of August 2017, interim dividends paid 30 cents per share. On 31st August 2017, interim dividends paid 30 cents per share. So for the shares that we have, so to calculate the interim dividends on our, okay, let me first record the net profit. Net profit after tax. The net profit after tax that we have, it's our, yes, 959,400. And then for the repurchases, for our repurchases, so let me say 300,000 shares repurchased at we'll calculate the amount later. As I've said, we are given the amount is 465,465. 465,000. $465,000. So after our repurchases, on our retained income note, it's going to be our dividends. It's going to be our dividends. So we all know that we are starting with our interim dividends. Which on our information they said interim dividends paid 30 cents per share. 30 cents per share on this date, which is 31st August 2017. So meaning that on this date we have the shares at the beginning of the year minus the repurchases of the shares. So we are going to say the 1,280,000 shares minus the 300,000 shares. 1,280,000 minus the 300,000 shares. It's 980,000 shares. So we are going to say 980,000 shares times the 30 cent. 980,000 shares times 30 cent, which is 0.30, which is then going to give us our interim dividends. So we are going to say on our calculation sheet, going to say 980,000 shares times 0.30 cent, which is giving us 294,000 rands. 294,000 rands. So by the look of things, on our ordinary share capital note, we are given these two amounts. They are already on our answer sheet. So the next information says, on the 31st of October 2017, additional shares were issued. Additional shares were issued. So to calculate those additional shares that were issued, we are simply going to say 1,480,000 rand. You are simply going to say 1,480,000 rand, 1,480,000 rand plus the 300,000 rand minus 1,280,000, which is going to give us the 500,000 rands. So now, what was I doing? I was calculating the shares that were issued during the year, because we are not given how many shares were issued during the year. So because we already have almost everything on our ordinary share capital, every information, we are only left to calculate the shares that were issued during the year. So it's balance at the end plus the repurchases minus the balance at the beginning of the year. So we have our shares issued during the year, shares issued, issued during the year, Also on the value of the shares, we are going to do the same thing. We are going to say equals to 8,816,000 plus 1,635,000 minus the 6,976,000. So it should make sense. So we are done with our ordinary share capital, and then for our interim, for our final dividends, the information goes as follows. It says final dividends were declared at the end of the year, which is the 28th February 2018, meaning that final dividends is going to be our balancing figure. Final dividends is going to be our balancing figure on the retained income note. On our balances, we have both balances at the beginning of the year and the balance at the end of the year. Balance at the beginning of the at the end of the year, it's 384,600 rands. 384,600 rands. This is our balance at the end of the year. This is the balance at the end of the year. So as I've said, it's our final dividends is going to be the balancing figure as well as the dividends. So we are going to start by calculating our dividends at the end of the year. We are going to say 384,600 plus this amount should be a negative. Actually, it's a negative amount. Just forgot to put the negative sign. So it's 384,600 rands plus 465,000 rands minus the net profit after tax, which is the 959,400 minus 376,600, which is the balance at the beginning of the year, which is then giving us the negative 486,400 rands, which makes sense because dividends are this is the amount that is going out of our business, paying the shareholders of the company. So meaning that it is an expense to the business, which means that it should be in a negative format. So for our final dividends, we are going to say this amount plus, not a plus but a minus, we are going to say 486,400, 486,400, 486,400 minus 294,000, 294,000, which is giving us 192,400, meaning that 194,000, oh my god, let me just finish up. It's 192,400 plus 294,000, which is going to give us our 486,400 rands. As we all know that this amount is always in brackets and this one is always in brackets. Both these amounts are negative amounts. We are done with our part 2 of the question. We are done with our notes to the balance sheet. If you haven't subscribed, please subscribe. Yes, we are done. Thank you for tuning in. Don't forget to subscribe, like, share and comment. For any questions, please drop them down on the comment section below, and then I'll try to answer every questions as quickly as possible. So thank you very much.